Well, hello everyone. It is Friday, February the 18th, 2022. I am Dale Delbridge, Benchmark Realty, Murfreesboro, Tennessee. This is your status chat. Sell, buy, or hold off? That's the question a lot of people are asking. We've had a tough seller's market and buyers are kind of worn out, and I've heard several of them say, well, it's just too tight. I will wait a while and see what shakes out. Is this a good strategy? Well, before we do a shallow dive in this, because I can't do much in the space of a status chat, let's consider this. Any story that I bring to you from the internet, you can find the full link to that story in the description of status chat in which it appears so that you can go look it up. Now, where is your first place you should go when you're looking for real estate information? That's right, calldeltosell.com, because I am local, I am a professional, and I have some information already at your fingertips. Let's look at the fact when you drop water in a bathtub or a bucket, that splash goes up, comes down, and the biggest ripple, the highest amplitude is right where that drop fell, and it ripples out, it dies out as you go away. The most important information you need is local information, because that's what your market is doing. From Murfreesboro or Rutherford County to Middle Tennessee to Tennessee to the United States, all of those markets matter, but the one that matters most is what's happening in your neck of the woods or where you want to be, whether you want to sell or you want to buy. So that's what's important. And a lot of people have been speculating for a number of years we're going to have another big crash because prices are just too darn high and they can't stay that way, and let's hold off a little bit and we'll get a bargain. Well, the crash in 2008 that kind of rippled on through 2010 because a lot of people lost their homes and ruined credit, that situation cannot happen again because it was addressed by legislation. Now, can high pricing and inflation and shortage of supply chain issues, can that cause a ripple? You betcha. But that will be a new problem, and that's what we have to look at. We can't look at 2008 and believe that we're going to duplicate that situation. Even in 2008, Middle Tennessee, our area, didn't get the big hit that other places have. Why? Tennessee is a balanced budget requirement state. We run a surplus. We're the best run state in the United States, and we have no income tax. So we are growing when states like California and New York are actually losing population. They're selling out. They're coming to Tennessee. We benefit from that. As sellers, as buyers, it can be a little tough fighting that much competition. So let's look at whether our markets are responding. Let's start with Middle Tennessee, the MLS at a glance, the total volume, total Middle Tennessee area. Well, it doesn't appear to me that the average price, the median price in Middle Tennessee has suddenly dropped off a cliff. Let's look what it was this last month, January 22, $355,990. Now, if I do my mental math right, that should be $10 short of being $356. Well, what was the median price the previous month? $357. So that's $1,000 median price in the entire Middle Tennessee area, MLS, 1 month. Previous month, $350. So we're going from $350.25 to $357, about $2,000. All right, what is the next step? $350 to $350.25. Pretty steady. Prices are not falling. Well, let's look at price per square foot. Looks like it's doing the same thing. Pretty well, it's a little bumpy, but pretty well still going uphill. Inflation's going to make this go on up even further. Inflation should affect the median price, making it go up. But we do have the option with new construction to change what they build. So that can have a little bit, we'll see, long range, depending on the housing starts. Well, live data, what is this? This is broken down into several areas that I have pre-selected for you guys. Let's look close to my home. I live outside of Murfreesboro, south side of Rutherford County, Murfreesboro, Lascassas, Rockville, and Rutherford County South. Single family, 3 bedrooms, 2 baths. Let's see how our data looks. Okay. We do see that Las Casas is a little smaller. It's that color right there. Is a little smaller community, and it has bounced up with probably some quite nice homes over the period. But overall, it's trending up. Let me take my pointer out of the way. It's going up. It hadn't fallen off. Let's go back. Days on market hasn't been violently shaken. Let's look at any of these that we have. Median price per square foot is going up. It's kind of flattened over December to January, but it's flat. It hasn't dived. Look at closed sales and pending sales. They're pretty well steady. Rutherford County had 1849 in January, 1861 in December, 1837 in November. So we're doing pretty steady. We're not seeing any drop off in action that I can see from these charts. Why do I bring this to you? Because just like that ripple, what's closest to home has the biggest effect. So let's go up here to this one I have picked out. This is Wake County in North Carolina. You've heard of Raleigh-Durham. Well, Raleigh-Wake County, what does it say? Read that right there. Big scary words. 34% decrease in Wake County real estate transactions in January. North Carolina, I believe it has an income tax. It's a blue state. And it has a 34% decrease in transactions for whatever reason. So, how does that compare our Tennessee to our Murfreesboro, Las Casas area? Transactions. Well, that would be, I'd say, closed sale. 1849, 1861. That doesn't look like our market is going to suffer this 34% decrease that Wake County saw between December and January. Come down here, I can skip this. Well, that just repeats it right here. Raleigh, a new report from the Wake County Register of Deeds finds that there were 34% decrease in real estate transactions in January. Let's go back to here. Down here at the bottom. This I find this a little bit interesting, the way they phrase this. A silver lining, they call it in this report. Still, the measure of the median price across all of the 1986 transactions of real property in Wake County fell to $410,000, down slightly from $411,000 the month previous. To me, that's not really falling. That's pretty well much just a flat spot right there. That's a flat spot. So that's not a 16% increase in price. That's not a 5% decrease. That's pretty well much flat. But look at this information we have here. A 34% decrease in transactions month over month. Now, this would be month over month. This typically means from the previous month. Year over year would mean like a January 21 to a January of 22. So that's a big drop. Come down here. Total sales from all three segments over $1.79 billion for January of 22, down 48% from December's total sales of $3.48 billion, the report reads. Wow. This is not what we're seeing in our state. Other states are seeing things similar to this. So when you look at some of these predictions that are done on the grand scale of the United States, you might just be making your decision based upon bad information. You need a real estate professional. That's why you call Dell to Sell. Where do you go? CallDellToSell.com. That's where we just were. Let's jump back here. Right there. These handy dandy little treats. Flip it on back. And there we go. Now there's something else I want to talk about. Let's talk about that information that we're seeing. I don't know if we're going to have a long time. Let me check my running time. Running time says... All right, well, I'm running a little bit long, but we'll continue from where we are. All right, 9 minutes now. Let's look at these. This is just Google. I just pulled up Google, and I'm going to use one magazine, one publication to see how it turns out. Okay, Fortune, 2022, 217. The spring 2022 housing market will absolutely crush buyers. Well, that's enough to make you want to cry right there. That's enough to make you want to quit. But do you want to quit? Do you want to delay where you're going? It says Zillow says home prices to spike 22%. Now we have another same date, 2022 2/17, Fortune, same publication. One day ago, it says home price is set to soar 12%. What? I thought this says 22%. Okay, that's a different person's opinion. A lot of people have a lot of different opinions. Here's one, a little later, just 10 days before, a little earlier, I guess, a little older, I mean. It says, our housing forecast was way off. Well, I've seen it go from 11 to 12 to 16. It's all over the place. It's difficult to make a decision when you see something like this. Here again, February of 22/17, 22%. So there we go. Your information, when it's based upon national data, has value, because if other markets crash, perhaps we might have some supply chain benefit in that we might get our dishwashers and our ovens and things and garage doors and the other wonderful bits that we're having trouble completing houses with. Maybe if they slow down enough, we'll get a little bit more of the lion's share. But what does it say? The whole point is, don't trust the information that needs a filter, that needs an experience filtered, and do the interpretation. Well, let's go down here one last thing. Now, we know that we had the CPI, the Consumer Price Index. Last month, we got the notice that said that year over year, it went up 7.5%. That's the consumer price. That's consumer inflation. The wholesale price, or the PPI, the producer's price index, went up 9.7 in that same period year over year. So the wholesalers got nearly 10% inflation. The consumer got 7.5% inflation. Both of those way above expectation. If you watched my show previously, you've seen where I brought in the Fed's chairman who hinted at raising interest to control inflation. How does that work? Pretty darn simple. If you cannot control your prices go up when supply goes down. Scarcity. When we had the Rona going on, people were paying good money for toilet paper because they didn't think they was going to get one. So they were paying a high price for an item because there were few of it. Well, how does raising interest cool an economy? Well, if you cannot increase supply, which affects price, you decrease demand. And how do you decrease demand? On things like these durable goods and homes, you raise interest. When you raise interest, you basically make fewer and fewer people able to buy that product, which increases the available products at that existing manufactured rate. However many they have fewer people that can afford to buy it, and so you have a more lax supply. We actually can get more months worth of supply of homes available if we raise interest rates, simply because people can't buy them as fast. Is that the path we're going down? Well, let's come down here to this little bit, the affordability calculator, just some made up numbers to make a point. All right, we looked at what our Rutherford County area was in our city. So let's say we have this is what's sitting here, because we want to play with some numbers. We used to have, like, in the twos. So an annual income of $70,000. Whoever this is, they got plenty of money because they only have $250 of monthly debts. And they put down $20,000 on the home. And with a 2.875 interest rate, they could afford to buy a $340,000 home with an $1,850 a month. And this is what people are nailed with. Most people buy as much home as they feel like they can buy, as they can comfortably buy, and that sets what they can get. That's pretty well much it, right? You buy what you can afford. How much house can you buy if we take that up just to 3 7/8? All right, still same price, same monthly price, but now we've dropped down to just over $300,000 home. So what happens if we take another percent, because they're trying to control inflation and they're raising the interest rates, and it may take a year. We don't know how far or how fast, exactly when they're going to do it, but the Fed says that interest rates are going to rise. Now, this is not a great deal, just 1 percentage point, but look what it has done with that same monthly payment. Dropped it, what, about $30,000, $32,000? So if your interest rates are creeping up and you're counting on your home prices dropping, if we have 1% increase in there, it would have to translate to a $30,000 drop in the price of the home for a mid-range house, a typical median house in Rutherford County. So how do you feel? Is it worth going back to work, looking for a home, fighting for it as the interest rates slowly climb up, and we know that the inflation is going to elevate the price of the home? When we go back to Wake County, down here in our silver lining, for a $1,000 change in a $400,000 home, they just kept the price level, but the actual number of transactions dropped by over a third. So it will take significant non-selling of houses before they start dropping that price. Eventually, they'll have to bring the price down in this area because nobody's closing deals. So I hope that is good for you. I know I'm rushed right through it, and I stutter a little bit as I go through this because I'm trying to be quick and not take too much of your time. But does it help you to make your decision? Not me selling you, not me pushing you, not me being Mr. Real Estatery, Mr. Salesman guy, but just your friend trying to help you with the information. Does it help you make a decision to sell, buy, or put it off? What makes sense to you financially? So anyway, let's end this part and get back to the show. Hello, I'm Dale Delbridge of Benchmark Realty, Murfreesboro, Tennessee. If you are currently unrepresented and would like to know how to compare up to 3 properties side by side and room by room, then go over to my new YouTube channel, Call Dale to Sell. That's 1 L and Dale, no spaces. Watch the demo on Real Scout and then call me and we'll set up your exclusive ad-free account today. Now, I know that previous segment went a little long. It's not really my desire to do that. Perhaps I should have broken those out into 2 separate ideas. The first one is Rutherford County, Murfreesboro, Middle Tennessee is not the rest of the nation. Be careful when you do your own research that you don't cause yourself unnecessary heartburn and heartache. The other thing is looking at the data, the real data that you get on my website, calldale2sell.com. You can see what we've been doing. It's updated monthly. I demonstrated that, checked it out. Do you really feel that the prices are going to go down? Because we know that because of inflation, the Fed has told us interest rates are going to go up. How much, how far, how fast, I don't know. Nobody does. But what we do know is as your interest rate goes up, most people's buying power goes down because most people buy as much house as they possibly can afford to buy. And when your interest rate goes up, your actual maximum price goes down. So do you expect the prices to go in that same direction? One of those has to outrun the other one. And if you don't have that, it may make more sense for you to sell now or buy now to get this over and done with, out of the way, so that you can relax for the next couple of years or so. Remember, call Dale to sell, call Dale to list, call Dale to buy. Now let's look at the numbers. Last week, 2/11/22. We had 7701 in the opportunities. That was down from the previous period. We had 4153 in the under contract, still showing that was up from the previous period. And the integer ratio went up by 4 percentage points to 54%. This week, 2/18/22, we had 7680 opportunities. That was down over the previous period, and we had 4140 in the under contract still showing, and that was actually down just a little bit. However, the integer ratio between those two numbers remained unchanged at 54%. Waiting is up to you. And you need to have the best information. You need to call a professional. Call me, call Dell to sell, call Dell to buy.